Our next story is the CPP. So not the CCP, but the CPP. The CPP, if you guys don't know, is the Canada Pension Plan, and it's kind of like the Canadian version of Social Security, I guess, where it's if you're retired and your income is below a certain threshold, and you're like the government doesn't want you to starve on the street, so they set up this Canada Pension Plan, where everyone who is working needs to contribute to it, and then they pool the funds together and they invest it, and then they distribute that to people who need it once they retire. Right. So basically, the concept is pretty simple. However, because the CPP needs to be invested, it is kind of it does need to be managed, right? It's a managed portfolio. So what happens is that somebody did a study as to exactly what the performance of the CPP is, and it looks like that the CPP is chronically underperforming index funds, which is a shame because like just to think, like they're hiring all these people to manage the fund, and then you could have made more money just by investing it into an index fund, which is passively managed, right? It's rebalanced using a computer, so it's just nobody has to sit there and press buttons. It's all automated these days, right? So you could have just done that very easily, and you would have made more money doing that as opposed to having people manage it. I know that this story is gonna be very appealing to Dom because he's the one that's been advocating for investing in low cost index funds for a very long time. So I guess I'll pass the question off to you first. But just before I do that, let me just go through a couple of key points that are in this CBC article that I saw surrounding, or I think maybe this is Globe and Mail. Anyways, it's a publication article that I saw from a relatively reputable news agency. So basically, in this article, the article says that if you benchmark the CPP's performance against a like a benchmark an index fund, the relative return is negative 0.1%, which means that they underperformed the reference benchmark index fund by 0.1% annualized, right? We're talking annualized return numbers, right? So the reference portfolio averaged 7.8% returns, which is like, it's okay. It's not like anything spectacular in of itself, by the way, right? And I think that this reference portfolio was like it's not like an S&P 500 index fund. Is actually like an even more diversified mixture. So it has like global equity and has bonds in it as well. So it only averaged 7.8%, which is like not great to begin with. But the CPP has averaged 7.7% since it started its active management in 2006. And again, this is annualized, not like per year, right? Not in total, but still, like the average is below the global index fund. And if you were to benchmark this, I haven't done this, but if you were to measure this against, say, the S&P 500 or the Nasdaq, which are also indices, right? If you were to average against those, then the disparity would be even bigger, right? Like because S&P 500 has for sure outperformed 7.8% on average per year for the past decade or decades. So yeah, anyways, so you're thinking like 0.1% like below the benchmark. Like what's the big deal, right? Like it doesn't sound like a big deal. It's fine, right? So here's the big deal. If you guys scroll down like further, on the second image, I highlighted the key points. All right. And it's that the compensation across this entire staff averages more than $500,000. So this is literally how much these fund managers to make money, right? Like how much money they make in a year, where their average compensation, like the average compensation, not like some people, the fund's five highest paid executives now receive an annual compensation of $4 million, which is almost five times as much as in 2006. And then the average across the entire staff is $500,000, right? So these people are getting paid like, massively. I think the median Canadian income is around like $50,000 or something like that, $60,000, right? So these guys, the average is making 10x more than the average Canadian, and they're not even outperforming the fund, the index funds. So my question to you is, how do you guys think we should solve this issue? Do you guys think this is an issue in the first place, or do you think this is okay? And if it is an issue, how do you propose that we solve this issue? And I know that, we as Bitcoiners, or me and Tristan maybe, are going to advocate for adding Bitcoin, but that's maybe like one part of the solution. But we can talk about that as well. But just holistically, do you think Bitcoin could be a solution to this, or just provide your thoughts? So, Dom, as I mentioned, I'll pass the question off to you first, because this is kind of like your wheelhouse, right? So yeah, how do you think we should improve the CPP, or if it should be improved, or do you think this is okay?
Can I sign up for a position at CPP? Maybe, maybe I can turn things around.
No,
I think
honestly, like I believe that you would do a better job than these people, right? Like, because people, they always like, professional money managers always make it seem so mysterious, and they're like wizards at doing this, and like only they can make you money. And then if an average investor comes in, they're gonna like completely f up and lose everything. That is completely a lie. Like 100%, right? And as this is a perfect example where just like the index itself, like you had to do basically nothing. You just buy the index and you can outperform these guys. But yeah, sorry, I cut you off, Dom. Continue.
no, it's no biggie. I think it's pretty obvious. Like if I were in their position on exactly what to do, I think lo and behold, an index fund would be a great hold for the CPP. And in terms of like Bitcoin, like there would be like maximum profit, like maybe 5 to 10 years, possibly down the line. But I think for CPP, maybe perhaps people would need the money like between those like weird periods of time. So if you had like an index fund, even if there was like a little bit of drop down discrepancies, like they could still find ways to work things out, and then the overall performance would be like almost guaranteed. So I think like low cost index funds would be the play. Like that's just like really biased because that's pretty much my investing strategy. And I think the fact that they get paid like almost $500,000 per year on average is like bananas and flabbergasting to me. I think as like a huge like manager of like funds, like let's just head funding, whatever you want to call it. I think maybe there's a lot of like yap that needs to go into like contribution, because you can't just like maybe take things a little simply in their position. So they need to like act as if they know what they're like investing into, and like making sure that they're making the right choices. But deep down, I think index funding might be the best thing, but it might not run through in like the grand scheme of things for them. So I guess that's why they're in this position right now. But yeah, definitely index funds for the win for me. So yeah.
Great points. Tristan, how would you fix the CPP, or do you think that there is an issue to begin with? Maybe you think it's okay, or if it's not, how do you fix it?
Why are they managing it so aggressively? It's really what it comes down to. Like, as Dom is kind of alluding to, if you want stable or moderately stable, but predictable-ish, low volatility, which all of this is stuff that you would want with the Canadian pension plan, right? People are going to need to be able to pull out of this all the time, and people will be adding to it all the time. You don't want to be allocated 100% in Bitcoin miners and having to pull money when the Bitcoin miners are 50 cents, and then having to pull the same money when the Bitcoin miners are at $100, right? Like it's not practical to take the approach of consolidation of your portfolio in order to maximize returns when it comes to something like similar to a pension plan, right? Because you can't afford to coast through volatile periods, and you can't afford to use the volatility to your advantage, because you can't afford to be in a position where you're down, really. Like not to the same extent. So I don't know why they're spending so much money hiring all these managers to manage what, because really what it comes down to is what they should be doing is exactly what Dom said, which is index funds, safe stuff. Maybe you take a few more speculative plays on the side. Like I'm not opposed to the whole 5% Bitcoin position allocation or anything like that. But the lion's share of that portfolio should be in not very volatile and fairly predictable assets that will beat or meet inflation at a minimum. So I think that it doesn't make sense to me why they're spending so much money on managers to manage something that should be, in essence, as little managed as possible, in order to generate the average market return. Now that's kind of where I'm getting at. Now, if I recall correctly, were these not the guys who bought a stake in FTX and then, lost it all because FTX went belly up?
I think that was the Quebec pension plan. So this is the federal one, and then the Quebec one was the one that the provincial Quebec one was the one that bought FTX.
Yeah. I'll just say, why the hell are pension plans in general buying stuff like FTX, clearly without sufficient understanding of the company and without having completed sufficient due diligence to look at the company and go, this is probably not the best company. Like, I don't know. It doesn't make a lot of sense to me that they're paying these people this much money and then they somehow can't seem to either beat the market if they're going to be paid a lot of money, or and honestly meet the market if they're going to be paid. It just seems like a giant waste of money, is really my opinion.
Yeah, I'll tell you why this is the case. I think it's just because pension plans, as much as they want to minimize volatility, they still need to go after high returns as well. And that's why they invest in these FTX or venture capitalist funding and all that stuff. Is just because they are desperate for return as well. And this is why I'm such a big advocate for Bitcoin. And I think some of you misunderstood. I'm not saying you guys, but the audience members, maybe some people will misunderstand me when I advocate for Bitcoin. I'm not saying that these pension plans should go 100% Bitcoin, right? So for these pension plans goals, right, to pay out people as people are retiring, I think it's probably not the best strategy actually to go 100% Bitcoin, right, because of the volatility, as Tristan mentioned earlier. But to completely ignore something like Bitcoin is a huge mistake. Because why? Well, as you can see, these pension funds, they chronically underperform index funds. So in order to fix that issue, they need something that could grow exponentially, right? Kind of like maybe Bitcoin, right? Adding 5%, I think is as a hedge is a terrific idea, and they should definitely do that. And I bet that since they're only down by negative 0.1%, compared to the benchmark, I bet that if they added Bitcoin anytime in the past 5 years, at just 5% and held it, they wouldn't be, not underperforming the indices. They would be overperforming it, right? So this is just kind of my thoughts around that. And yeah, I think we should also question, as some of you guys mentioned, that we should probably question why these funds need to be so actively managed. I know they're probably not day trading or anything like that, right? They're not going and day trading on Wealthsimple or whatnot, or on Robinhood. But it's just the fact that they're actively managing it, and they're, I don't know, I guess they're buying and selling ETFs as well, index funds themselves. But just the fact that they're making these decisions and it's not showing results, and they're getting paid so much to make these decisions that don't show results. I think that's a huge problem, right? And I'm thinking, like, if I was in charge of managing the fund, I would be looking to, fire some people, quite frankly, right? Because it's like you guys are getting paid $500,000 a year, which I don't think like the normal person can even wrap their heads around how much money that is. Like, could you imagine, right, making $500 a year just to underperform like an index fund, which takes like anybody with like who's 18-year-old with a heartbeat to sign up for an account and buy. and you can beat a person who's making 500K a year managing funds. It's just ridiculous. And this just goes to show how inefficient the government is. And we should, maybe this is a different topic, but maybe we should think about drastically reducing the size of the government and returning tax dollars to the people whenever possible. So, yeah, that's a whole nother issue. Tristan, you were going to say something?
If you give me $500,000, I can lose. I cannot beat the market. I can definitely underperform the market if for $500,000 a year. I can guarantee I am capable of that. So,
yeah, that's what I'm saying, right? We should have higher standards for our people that are, managing funds. And this isn't like a private company. This is literally the federal pension plan, right? So if it's the federal pension plan, if it's the government and is funded by our tax dollars or our CPP contributions, which, some people get into an argument on whether that's should be considered a tax or not. I consider it a tax, even though it's not technically a tax, but it's for all intents and purposes a tax. So it's funded by our tax dollars. And the fact that they're not even performing something that takes outperforming something that takes like no brain power to do, which is just to buy an index fund and just hold it. It's it's a shame. That's what I'm saying. Like, we should fix this.